Jobless claims remain relatively steady, rising only slightly last week.
About 229,000 people filed new claims. That's about 4,000 higher than the previous week, but still well below pre-pandemic levels. Now, this comes as the ratings agency Fitch is moving the U.S. to a rating watch negative ahead of a potential debt default. The country currently has a AAA rating, the highest available.
Joining us now to explain this in small words I can understand is Bernard Yaros. He's an assistant director at the economist Moody's Analytics. Okay, so we've talked about this in big meta terms, bad, scary thing, blah, blah, blah. But can you explain to us, if the U.S. actually defaults, even for a short period of time, where are we going to see the biggest real world impact in the economy?
So ultimately, it's going to be the U.S. that suffers the most. But when it comes to the global impacts, there's a saying that when the U.S. sneezes, the rest of the world catches a cold. So in other words, when we go into a recession, we take everyone else down with us. So if we go into a recession, millions of jobs are going to be lost here. Households are going to lose confidence, and they're not going to want to spend. And businesses are also going to be reluctant to hire or to invest. So if we as consumers and businesses are packing it in, that means that we're going to be importing less goods and services from the rest of the world, which would be especially bad to major global economies such as Germany or China, for example, that really rely on trade for their own growth. And there's never a good time for a global recession that results from political dysfunction in Washington, but now would be really a bad time for the global economy. Inflation is still a problem, so global central banks would not be as willing as they otherwise would be to provide much support, at least initially. And also the willingness and ability of governments around the world to provide economic support would also be limited than before. And that's just because of all the debt that governments have had to rack up over these past 3 years in their aggressive response to the coronavirus pandemic, which was really a once in a lifetime economic disaster.
Yeah. Bernard, so much of the global economy relies on the dollar. How would that affect those countries that have their currency tied to ours?
So it would be problematic. I think the biggest concern for us is really, would the U.S. lose its global currency reserve status? Or will there be another currency that replaces the dollar?
Mm-hmm.
In the short term, the answer is no, not the euro or the Chinese yuan. But what we see is that in the near term, what would happen if the Treasury were to default on its payments is that the dollar would actually increase in value. And that's just because investors globally wouldn't know where to go except to where they always go when there's a crisis, and that's the U.S. And that's precisely what happened 15 years ago during the global financial crisis, when it was the U.S. housing bubble that was at the epicenter of the crisis. But over the long term, we would see the dollar's status globally really be diminished when you have investors just starting to seriously question whether the U.S. government is willing to meet all of its financial obligations. And central banks around the world typically hold foreign currencies and reserves to pay for imports and other purposes. And these foreign currency reserves are often held in government bonds such as treasuries. And the U.S. dollar accounts for the lion's share of all of these foreign exchange reserves.
Yeah.
But a treasury default would likely prompt countries to rebalance these reserves away from treasuries and to look for other alternatives. And so there are clear long-run consequences to the dollar if we do default next month. And the risks to the dollar that I just mentioned would be even worse if we continue to have debt limit debacle after year, with more unthinkable instances of treasury defaults. And that would really open the door for some ambitious country to really step in and try to replace the dollar as the global reserve currency 20 or 50 years from now.
Full faith and credit. That's why it's important. Bernard Yaros, thank you very much.
Thank you.